Hello, welcome to the Dixon Realty third quarter of 2024 Reno Sparks market update. We're going to look at just some national news that's impacting the real estate market. And first and foremost, interest rates definitely has been a hot topic the last month and a half, as we've seen and heard that the Fed would actually be cutting the rate by about a half a point. And so rates, once they knew that that was potentially going to happen, started to come down. And so we're seeing the average rates slightly above 6%, maybe 6.25% for a 30-year fixed rate in the United States. So that's good news for buyers. Also good news for sellers to a degree, that because that opens up more buyers pools that can afford, again, the higher prices that still kind of remain out there throughout the country. That then goes into the next slide that shows, because of those interest rates over the course of this year coming down, has allowed single family home payments to be about 7% less than they were last year. And again, that is more interest rate driven affecting those payments than it is pricing coming down. But the next slide could cause some decline in pricing, because we're seeing that inventory is on the rise throughout the country. So total U.S. single family inventory is 38% greater this time this time of year compared to last year. So you're going to see that this is also a trend here in the local market. So let's jump into the Reno Sparks market. Our median sales price had a pretty heavy decline month over month, nearly 4%. So 3.8% decline month over month. We topped out about 610,000 the previous 2 months. But we still are about 3% higher than this same time last year, which was 570,000. The amount of homes sold was 407, so that's an increase of about 5% from last month, and a pretty substantial increase from this time last year, almost 10% compared to September of 2023. New contracts, this shows us our demand. The demand is still holding fairly strong for the year, but it is quite a bit less, again, relative to years past. We don't have the context on here of 2017, 18, and 19, which we consider more, again, of those normal years, when usually September would be somewhere in the 500s. In 2024, it's 438. So that's up 30% from last year, but down 1% from last month. But overall, this is definitely less than an average year. So as interest rates continue to decline, that will help with demand. But the real news is new listings are declining, and we saw 503 listed in September, and that's down 1.4% from last month, but that's an increase of 22% since last year. That then feeds into the increase that we've seen over the course of this year. And look at this graph. You can see here, since January, where we had about 500 homes on the market, we now have double. We're at 1,008 homes available on the market. So that's only a small increase month over month of 2.3%, but year over year, again, 25%. And from the beginning of the year, up 100%. So this is why I think you're seeing that decline in price this past month. Buyers have more options. That much active inventory eventually catches up to you. While it's still less than, again, a more normal year, like a 2020, 18, 19, and so forth, where we had close to 1,400, that's more normal. We're still less than that, but it's a substantial increase over the course of this year. So that, as we talk to agents, anecdotally, they talk about it feels slower, and this is probably why, because the inventory has definitely increased. Because of increased inventory, buyers have more options. There's more to look at. Our days to contract has also increased. So we've seen from month over month an increase of about 5-6 days. And so that's a 20% increase. And year over year, 40.9%, so almost 50%. So this is getting back to kind of a more normal market. It usually takes 30 to 45 days to get into contract on a home. So we're hitting more normal ranges, but at the same time, it feels a lot longer than the last year or two, because, again, it has been a lot less. And then our last slide here, just our close price versus the seller's asking price, and we hit 98.6%, which was a decline of 0.5%, and year over year about a decline of 0.2%. So again, that's kind of more typical too, that we're in that 98, low 99% range. So that I think will be consistent throughout fall into the winter. Thanks for watching and for just listening in. If you have any questions, please reach out to your favorite Dixon Realty agent for any additional information. And we look forward to our next quarterly report at the end of Q4. Thanks so much.